Hello and welcome to the Humble Investor Bull Bear Market Report for May 29th of 2018. Hope you had a nice Memorial weekend. And here is our agenda for today. We're going to go over the broad market readings and then get into the nitty-gritty of this week's operating plan. First things first, are we in bear market territory? We're worried about a bear market right now? No, we're not. The barometer says that the bull market force, although not completely 100% strong, still looks healthy. The trend is to the upside right now, the longer term trend. 12-month momentum still looks good. We've got the S&P 500 right here and the MSCI All World ex-USA Index. Now the S&P is really starting to outpace the All World ex-USA Index by a pretty good margin here. And in fact, a lot of the international markets have started to fall and break through support, and so we really want to be aware of that and focus on the U.S. markets right now. Still both above treasuries, and so they're not in bear markets according to this quite yet, but we want to focus on the S&P since it's stronger, or the U.S. markets. As far as correction risk, I think it was a little bit higher probably last week than this week. We were right in the top of the channel that it formed, or the trading range, and it's hung in there last week, and so we'll see if we can get a push to the upside. We're still probably a little bit overbought, but breadth is really not telling us too much right now, and so we'll see if we can get a pop to the upside and get through the top of this really tight trading range right here, or if in fact we do fall back below into the larger trading range. And here's a look at the S&P 500 on a weekly basis. It was up 0.31% for the week, and you can see here is just a weekly bar of that sideways price action of this last week of what we saw. So you can see it didn't even get out of the price range from the previous week, and we're just treading water right here. And so we'll see if we can get a break to the upside, or if in fact we do come to the downside here. As far as our monthly trend, we still like preferreds, and then of course U.S. small caps, and then U.S. growth. Weekly swing, here they all are, and I've got these highlighted because we sold out of these two this week, or this past week. And no scalps right now. Here's a look at U.S. small caps and U.S. growth, up 0.21%, and growth was up also a little bit. And you can see this is why we're in small caps over the large, because we've got this nice break to the upside, and you can see it's just stronger than the other. The large caps look similar to U.S. growth, actually a little bit weaker than U.S. growth, and so we want to be the one in the parts of the markets that are making new highs and breaking to the upside each time, not the ones that are lagging. And here's a look at oil and why we sold. So you can't see it on the chart here, but over here we do have some resistance that it ran into, and it was a small double top. You can see these candles are getting the wicks are getting longer, and so it means that they're taking profits. And so I just wanted to take some risk off of the table, and so that's what we did for oil. So we can get back in. Maybe if it comes down, it bounces on the moving average, we'll look at it, we'll keep an eye on it, but right now it's moving into cash. U.S. Treasuries, good week for U.S. Treasuries, up 1.78% for the week, and they're still sitting on support. Don't feel comfortable with them yet, because the trend is so strong to the downside, but it does look good for a bullish week for treasuries coming into this week. Australia down 0.43% for the week, and we still got our swing stop down here. It doesn't look too good for Australia. We've got these bear bars within here. We really would like to see just some strong bull bars for a break to the upside. Brazil down 2.63%. Didn't quite hit our stop, but we're right there. Very close to hitting it. We could get stopped out this week, and so we'll see if it gets hit. But it doesn't even look good for Brazil. You can see it's starting to waterfall here. This could be the last week where the bulls capitulated. I don't know. I thought that the prior week might have done that, but then we did see some follow through this week. Here's the MSCI EFA down 2.38% for the week. Really don't like how it rolled over right here, but we do have a second purchase range in here, and price action really needs to look good if we're going to buy it a second time. So we still are ways away from our stop, but it looks like we might get back down or get down into our second purchase range here. As far as our new positions for this week, nothing for the monthly trender. Still looking at healthcare, and here's a look at healthcare. It was down 0.26% for the week, but again, if we do get some price action to the upside, then I'll look at buying if we get that buy trigger. And so this might just be a small bull flag, and so that's basically what we've been counting on. And with that, have a great week, and we'll talk to you next time.